starting. All attendees are in listen-only mode.
Good morning, everyone. This is Mark Raymakers here with Insurance Agency Marketing Services. Appreciate you taking time to join us here this morning on our Friday morning single premium life webinar. And for those of you that are new here, if you're attending for the first time, every Friday morning at 10 a.m. we will have a single premium life webinar. We're going to talk about products. We'll talk about sales ideas, concepts, etc. And this morning's going back to the basics on single premium life. This has been a tremendously successful, effective product that we've continued to see as our fastest growing, constant growing product since we started offering this years ago. This product's kind of near and dear to me as well. When I first got started in the business, the very first life case I wrote was a single premium. So it's changed tremendously since then. So for those of you who've been in this business for a while, that was back in '89, early '89, January. When I officially got started selling. So for those of you who've been around selling it long or longer, you'll recall those plans. They were just pretty much vanilla. It was a life insurance policy with a beneficiary and nothing fancy about it. So today we're going to talk about, what the single premium life products are like. Today we're going to talk about some simple things going back to the basics of it. This is a recorded webinar, and so you'll have an opportunity to review it later. The question box is open, so if you have any questions, you can certainly go ahead and type those in. And I'm going to go through a few things here real quick, tell you a little bit about us, how we can help you. And I think this is important. There's a lot of places you can send your business, and so it's very competitive out there without a doubt. And so for us, we really like to focus on education and making sure that you are up to date with what's going on in the industry. Not only that, but really to help you as far as providing you some concepts and some tools. And so I'm going to put a quick poll out here, and I'd like to go through this here as quickly as possible. So if you would just mark yes or no on this, and here's what we do. We have 3 of these training events a year. And if you've attended any of our webinars, we always have this poll out there. What we do is we fly you out on a Wednesday, so we're covering your airfare. We fly out on a Wednesday, and we do a few short presentations Wednesday evening. We do a full day of training on Thursday and a half a day training on Friday. Now, IMS will cover the cost of your airfare, so Insurance Agency Marketing Services pays for your airfare. We pay for your meals. We pay for your lodging, all with the intention of helping you to grow your business. Now, this is a life and annuity training academy. We have 3 of these a year, and we don't have the dates yet, but they're generally going to be in the spring, early summer, probably early fall. So what happens is we're going to email you out an application and an agenda so that once we have your name and we have our dates, we will email you and we'll call you and let you know when those are. This gives you an opportunity to decide which one's going to work best for you, what training event will be best. So we have presenters come from across the country. We're not going to sit there and talk to you about product for 3 days. We're going to talk to you about, again, marketing ideas, sales concepts, seminars. There's all different kinds of things that we cover. Now, we're going to have some of our top producers there sharing with you some of the things that they do. So these are the kinds of producers that are writing $10, $20 million of premium a year. So this is an opportunity to really get some good ideas. We do breakout sessions where we have a chance to learn more about things that are most relevant to your business. And with the DOL issue that's coming up, there's a lot of talk about whether it's going to happen with this new administration. We'll talk about what we can do to help you and what you can do to help yourself as far as being DOL ready. So there's a lot of great things that will definitely have a positive impact on your business. I've been with the company for 7 years, and of all the different events that we've had, and I personally present there, I have never, ever heard an agent say it wasn't worth their time. So if you're looking for a great investment in yourself, the only investment you have is your time to be away from your office, this is most certainly worth it. And the nice thing is that I notice a lot of friendships developing in these events because what's happening is you're hearing some of your peers that are going to share ideas that work for them. So everybody has a chance to not only share some of their best sales ideas, but to also hear some of the best things out there. And I will tell you, I have seen a lot of different good sales ideas, but the best ones I think I've ever seen are coming from these particular events. So again, if you're interested, mark yes, and then we'll go ahead and email you out an agenda as well as provide you the dates. And we'll get you set up with one of these training events. And again, we pay for your airfare, your meals, and your lodging, so there's really no out of pocket for you. Okay, well, it looks like this thing is skyrocketing as far as voting, so I'm going to give it one more second here, and then I'm going to close it down and we're going to move on. I know you're obviously busy trying to wrap up the year. Of course, things are slowing down a little bit, aren't they? Clients are not so interested in seeing us right now, as they've got bacon and shopping and all that kind of fun stuff, getting ready for the family gathering. So, okay, I'm going to close the poll. Certainly appreciate everybody's attendance on that. All right, let's move on. What else are we going to do for you? Well, we're going to reward you by getting your contract in. So once you start writing business with us, we have a new producer bonus, and they come in 3 different levels. Now, the first one, we're going to talk dollar for dollar today here, since we're talking single premium life. If you write one case, 100,000, or maybe it's 3 cases that equal $100,000 in premium. In addition to your commission, now you're going to have an option to choose between a $750 in cash bonus or a 2-year subscription to the website newsletter service or the iPad. So one of those 3 can be yours. You might say, hey, I'm going to wait till I get 300,000 in there. Then you can do this. You can choose between the full Social Security program and 3,000-piece postcard mailing, or you could choose a 2,000 matching marketing money to promote your business, or finally, then there's a $1,500 gift card. Do whatever you please with it. Now, I'll tell you, you could purchase the Social Security program if you wanted to know more about that. You could certainly call and ask for anyone in the annuity marketing department. This is more of an annuity presentation. It does allow you the option and the opportunity to write life insurance as well. So that's a really successful program. It does require some study on your part. But anyhow, so with that said, let's look at the 3rd level. The 3rd level is going to be the 500,000 level, where you can choose either between a 5,000-piece mailing and seminar coaching, or you could choose the 4,000.
Stop howling her. Don't howl over her.
Whoa, wait a second here. How do we have somebody else in here? Let's see if we can. We got other audio coming in here. I'm not sure how that's happening. Okay, looks like we got silence. All right. Okay, so then not only there's the 5,000-piece mailing seminar coaching with Matt Gill, there's also 4,000-piece mailing and seminar coaching with Dave Pimper. Both of these individuals will be at our training academy, so you'll have a chance to listen to their seminar presentation. In addition to that, you can visit with them one-on-one, maybe even purchase their program if you like. So if you opt not to choose either one of those 2, you have the Ritz-Carlton Travel Rewards. You can make your own personal getaway. If you have not been to our website, I encourage you to do so. It's www.imzing.com. You're going to see that there's all different types of sales tools out there. We've got our term quoter out there where you could run your illustrations yourself. We also, obviously, it's available anytime. So if you're with a client over the weekends or after hours, you can certainly have anything that you need, whether it's a quote, it's the forms, it's contracting. We have we're missing something here. We have the life and annuity news, the life and annuity grid out there. We have the long-term care product grid. So a lot of good stuff out there. All right, the other thing is, before we get into the actual meat of it here, is one last thing, a referred producer program. So let's say you refer an agent to us here. What will happen is, once we get that agent contracted, we're going to send you a check for $50. And once they start writing, we're going to start adding up what they produce, and each quarter send you a check. So for example, if they write, you get 3 producers that write a combination of $1 million, whether it's single premium life or annuities, and even, now the traditional life is going to be a smaller fraction in this. You're going to start getting some dollars paid out to each quarter. So for example, if you have 3 agents that over a year's period do $1 million in production, that's $6,000 in cash for you. And I will tell you, we have some agents that are collecting $10,000, $15,000, $20,000 in referred producer dollars. Now, you're not involved in the commission at all. They're not taking a commission reduction. It's just a way of saying thank you for their business and the referral. One last thing that I know a lot of our advisors like, unfortunately, a lot of them don't take advantage of it, is our marketing reimbursement program. And so I want to put that out there because this is a great way to support your business. So what IAMS will do is we are going to reimburse you for 50% of your expenses. All you have to do is send us a receipt of your expenses, and then we reimburse you up to 50% of that. Now, the way that money accumulates and the way you get reimbursement dollars is for every 100,000 that you write. So for today's purposes, you write 100,000 in single premium life, we put $200 into a reimbursement account for you. And this is in addition to your commissions. You're not taking a haircut for this. This, again, is a way of thanking you for your business. This is a way of being a partner, supporting you in what you do. And I can tell you that we have agents that are doing enough business with us that they are getting all of their seminar expenses, all the leads they purchase, they're getting all that cut in half. So imagine, if you would, whatever you're spending each month, maybe it's postage, whatever it is to grow your business, you'll see that you're getting a nice reimbursement for those expenses. Okay, so let's go ahead and jump into this real quick. I almost want to block out this screen just because I want to get your attention for a second here. I'm going to read off a couple things to you, and I think these are really important, and I'm going to tee this up to you here and explain why this is such a big deal. Now, our most successful advisors in selling single premium life have a great way to present and explain how to sell this particular product, and their lead-in is talking about long-term care. And if you ask your senior clients today, this is of great concern to them because they've seen it. They've had a friend, they've had a family member that's been in a facility, and they know how expensive it is. And they know if it happens to them, they're going to spend a lot of their assets down. So it's a very scary thing. But the thing is they don't want to pay that exorbitant cost to provide themselves for a product that they may never use. Now, if you look at it here, I'm going to tell you real quick. John Hancock, as we all know, was selling long-term care. They were going to exit the market in February. They have stepped that up. They are not going to receive any more business after this month. So that window is closing, and there's only going to be, I think, maybe 2-3 companies that'll have long-term care out there. So let me read some statistics to you. If you want to jot these down, or maybe not, that's fine. Again, you'll get the recording of the webinar, but these are some important points for you to think about. 79, that's the average age admittance to a nursing home. So you stop and think about your clients, how that would affect them. 40%, that's the percentage of individuals who reach age 65 who are going to enter a nursing home during their lifetime. So not quite half, but pretty darn close. 2.4 years is the average length of stay for a current nursing home. Now you've probably heard 2.8 or whatever it is, but nonetheless, it's less than 3 years. 8.94 months, that's the average length of stay for discharged nursing home residents. Here is the median annual rate for a nursing home is $73,000. Now, of course, it's going to depend on the area that you're in. For example, Florida's average annual is $86,000. You get to New York, it's $162,000. In Iowa, it's just over $60,000. Here's the other thing. This is why this product becomes so popular. And these two things, if you walk away from it, these are some things, this webinar today, when you walk away from this webinar, these are the two things I think that you really want to pick up. So for your person or client or prospect that's age 55 or younger, the average annual premium for long-term care is $1,831. For your senior clients that are age 70 to 74, that almost doubles at $3,421 is the average annual premium. Now, most of your senior clients are not going to want to cough up that kind of money. They're on a fixed budget. To pull another $3,400 out, that's quite a step for them. On the flip side, they may have assets that they can use for a single premium life. We reposition. We're not taking anything out of pocket. So let's go into today's topics. Why are agents not selling this product? We'll go into this here in a minute as well. Why is it so popular? We're going to talk about who's a prospect. Who among your block of business, who, when you're prospecting out there, should you be looking for? We're going to talk about some general information on single premium life. So we're going to dispel some of the myths that you might have, and we're going to maybe show you some things you didn't know that was available in single premium life. We'll talk about the underwriting of it. So many times I talk to agents and advisors out there that say my client's not going to qualify. Well, I would say that more times than not, that agent's wrong because we've got some carriers that are very aggressive when it comes to underwriting. Single premium life compared to annuity. This is another big thing. If you can sell an annuity, you can sell single premium life. In fact, a good lion's share of our business comes from agents that are selling the annuities to their clients. And who are the players? Who are we working with out there? We've got a lot of different carriers. In fact, right now we've got 10, 12 carriers. We're adding another one on. We'll announce here the first of the year. So we're doing a lot of it. We've got a lot of great carriers out there. We'll talk about some opening and some closing statements as well. And then why you should be selling with Insurance Agency Marketing Services. If you haven't seen it already, we provide you for some great incentives for doing that. Okay, so let's jump right into why your agents choose not to sell the product. Well, first of all, they believe that client has to die to benefit. And again, that goes back to when I mentioned in 1989 when I sold my first single premium life plan. That's all it did. You died, that was it. Well, of course, you could take a loan and withdrawal from the cash value of the policy, but that was it. It wasn't nothing fancy. They think it's a difficult sale. And like I just said, if you can sell annuities, you can sell single premium life. It really isn't that difficult. Yeah, and the other thing too is that when you look at the senior client, they don't want to buy life insurance because the kids are grown. They've got their retirement set up. There's no need for them to be looking at life insurance. So we want to look at presenting it a little bit different than as just a single premium life. In fact, our top sellers, as I mentioned here, talk about long-term care. And then they say, here's a product that can help you without having to come up with any out-of-pocket expenses. The other thing is a lot of agents don't maintain a good relationship with their existing clients. So to come back and all of a sudden they've got this great idea, it makes it a little bit more difficult. But I think for them, they think that's why they shouldn't go back because I just don't feel like I deserve the business. And that could be right. They're also concerned that underwriting will take too long or that the client will not qualify. I will tell you right now that single premium life policies, we have some out there right now, they will actually approve it while you're there. All you do is complete the paper application, do a phone interview. They'll tell you right then and there if they're approved. Not only that, when you submit those applications, if they don't do a point of sale, our carriers have, just this week, we noticed an application went in the morning, the client was approved that afternoon. So they're very fast in underwriting. They're actually as fast, if not faster, than most annuities out there. And the other thing is they feel like they have to learn something new. You really don't have to. That's where we come in. We simplify it for you. We're going to ask you some questions and find out what is your client's main objective. If it's more about buying a lot of long-term care, if it's more about having some great wealth transfer, but also with long-term care, a lot of premium, little premium, whatever it is, we're going to find out. And we're going to explain the product to you very well and make sure that when you go into that home, you feel comfortable. One other thing that we do is we make ourselves available. I can't tell you how many deals I have helped close with an agent on their very first case. What they do is they call me, they put me on speaker, I sit quietly and wait till a question comes up, or if they need a revised illustration. So we can help you with that. I'm not going to embarrass you. I can promise you right now. When I was in the field, I'd write 200 life apps a year. So I'm going to know when to talk and when not to. I'll wait for you to give me the cue. Okay, the other thing is they fail to see the value in the product. They have this mentality that, well, I can get more growth on the annuity, which, you know what, a lot of times you can, but we got products out there right now that are mirroring annuities, but you got to remember that growth is taxable. Single premium life, it's not. All right, why is this so popular? Well, if you look out there, there's about $1.4 trillion in assets to be passed to the next generation a year. And you may have seen something a little bit higher, a little bit lower. The bottom line is there's a lot of money out there. There's a lot of seniors have seen some really bad things happen in their lifetime as far as the economy, as far as the market's concerned. So they've been very frugal. They've saved a lot of money. Now, of course, it may depend on the area that you live in, that some of these economies are a little bit more suppressed than others. So you may not have a lot of clients that are going to fit for this, but the point is if you have two, it can make a world of difference in your commissions for that year. And more importantly, it's helping the client to sleep better at night. And also the tax-free wealth transfer. There's a lot of, clients out there with the help of their agent are helping to do a better job of wealth transferring. And life insurance is the most efficient way to transfer assets to the next generation in a tax-free form, I guess, so when you look at it that way, there's also that benefit. Also, as I mentioned, the high cost of long-term care, you use it or you lose it. And so with the single premium life, that's not a concern because these plans, if never tapped into for their confined benefits or the chronic benefits, whatever it would be, if they don't use it, it goes tax-free to the beneficiary, so they're not losing it. It's hassle-free. There's no compliance. There's no exams. Now, some of the companies out there, depending on the product that you write, we do have a plan where you can use qualified funds to fund a single premium life. It's a one-time deal. It's very simple for the client. I'll explain a little bit here in greater detail. But the nice thing is that once they complete the application, that's it. There's no exams. It's very simple. Also, top commissions. We're paying up to 15% depending on the product that you choose, whatever is best for the client. That's more than you're getting on annuities today. And the guaranteed interest. We've got products that will guarantee your client 3%. There's not a CD out there that's going to pay for or provide your client that type of a rate, unless, of course, you might be looking at a very long-term brokered CD. Let's see. I'm going to wait till I get down to the end here, Mark, and I'll answer your question. And then there's the tax deferral. So I've got a case I'm working on right now where a client's got $600,000 sitting in CDs in the bank, and they're coming up for renewal. And so we all know that growth that is coming from a CD or a checking or savings account, that's taxable. And when you look at what inflation is right now, it's 1.5, 1.6%, and that CD is not even getting paid that. That money is basically sitting there. It's worthless to them if they're paying taxes on it as well. So we can reposition those CDs into something that's going to get them a much better return at gross tax deferred. And we'll talk more again about product details, and you'll see why that's even more beneficial when you put in a single premium life. And the other thing too, new commission on old annuities. So if you're doing a review with your clients and you know that you've written an annuity on them 10 years ago, it's up for renewal, they haven't touched it, and it just doesn't look like there's any reason for them to touch it, we can take that annuity, put it into a single premium plan. Maybe we take half of it and put it in single premium so they can have their cake and eat it too. They still get the growth in the annuity, but now they also have a wealth transfer plan with some great accelerated benefits. Okay, so Mark, I'm going to see if I can decipher this. Is that 100,000 target or 100,000 FIA? I don't know if you're going back to one of the previous slides as far as the benefits are concerned. It would be either way. So on the new producer bonus, if that's what you're referring to, that $100,000 would be either an annuity or traditional life. Okay, so let's look at who's a prospect. I honestly think if you're in this business, you're going to have a prospect or you're going to have a client out there. And so what we've seen happen is when an agent gets contracted with us, the first thing they do is they go to their low-hanging fruit, right? And they'll write their existing clients first. And then as they go out and they see new prospects in the future, they know what they're looking for. They're comfortable with it. Who's the best person to sell to? Your existing client. It's easiest. They know you. There's a relationship there. And so by going through your block of business, you help them. That's where you develop your comfort level. So when you go into prospect, you're ready to go. We have an agent. I use him as many times as I can as far as talking about going to your existing clients. We have a guy called in one day. All he sold was annuities. He doesn't like life insurance. He wanted to avoid it like the plague. And he told me, he said, I don't want to talk about this. I said, well, let me share an idea with you real quick. I went through what I'm talking about with you folks right now. In 1 year, he wrote $1.3 million in single premium life. You figure he's making over 10% on that. So do the math and look at how much money he made in 1 year just by going to his existing clients. Now that he knows it, now that he understands it, he goes out and he's talking to his prospects and he's constantly writing business because he's comfortable with it. He understands the value of it. Okay, so annuity clients, go to your annuity clients. Look at those folks that you know that are sitting with annuities they're not drawing an income from. I'm sure you probably have some. We figured statistically, if you have $1 million in annuities on the books, you've got at least $100,000 out there based on the averages. So you take that times 9 or 15%, whatever product you choose, that's a big chunk of commission for you. And again, you're helping your clients. So look for those folks, especially as they get a little bit older, they slow down a little bit. The other thing is 10% free withdrawals. A lot of times you've got those clients out there that have a lot of money sitting in annuities. They're not sure if they're going to touch it or not. But what we're seeing is a good share of the agents out there and advisors are taking a 10% free withdrawal to fund the long-term care or fund a life insurance policy to get some long-term care benefits, etc. RMDs are another big thing. We see a lot of agents coming to us with their clients that have RMDs. They just stick it in the bank because they don't know what to do with it. They really don't need it. Well, worst case scenario, you put it in a single premium life and you get yourself 2 to 5% interest on it and it grows tax deferred. So why put it in the bank and let it get lazy? Let it go to work, set yourself up, or you set your client up with a nice wealth transfer product if they don't even need the long-term care benefits. Medicare supplement clients. Here's the other thing. What I've seen is, well, obviously with this open enrollment coming to an end now, it's all done as far as those of you that are selling it, you know it's probably a time to take a breath. But you're out there and you're seeing those senior clients. They're retired now. They're looking at their fixed budget, and they look at things that they're spending money on, obviously, right? Because they know what's coming and what's going out. So a lot of times what happens is those clients would just as soon free up their premiums on wherever they could. They don't want to pay premiums on life insurance anymore if they had a choice. And so that's what's happening. A lot of them are taking those old policies and they're putting them into a single premium life policy. It's paid up, it's guaranteed, and again, they get the accelerated benefits for chronic illness or confined cares at a facility, whatever. They also want to protect their assets from Medicaid spend down because they've seen what happens with their friends and their family. So we have some products out there that we can also set up to protect those assets from Medicaid in a spend down situation. Here's the other thing, life insurance clients. One thing I know, I used to sell a lot of UL policies. Well, I know when I first started, the interest rate was 9.75%. Well, it's come down tremendously since then. So if you're not asking those prospects and looking at your clients that might have purchased a UL policy from another agent before you came along, ask them to look at their life insurance statements. Chances are if they have a UL policy, it's in trouble because it was underfunded. This is an opportunity for you to save what they've got left and put it into single premium life. I'll tell you what, we do these all the time. I did one this morning here at 7:45. We had someone from Pennsylvania came in, and that's exactly what we did. The policy's in trouble, so we're going to save it. Policies with minimal net amount of risk. What do I mean by that? There's a lot of those old, I call them wedding policies. You have your senior clients out there that bought this whole life insurance policy 40 years ago, and it's a $10,000 policy with $8,000 in cash value in it. The insurance company is at risk for $2,000, right? So if you take that $8,000, you rolled into another policy now, we're going to get a higher value than what they have today. So even though it's not really going to provide much of anything for long-term care, the point is that you're going to buy them more death benefit than what they have today. And so again, that very first single premium life policy I wrote was exactly that. The net amount of risk was peanuts. The client was holding the risk, not the insurance company. Okay, long-term care clients. Here's something else we see quite a bit of. So we've got agents out there with us now that write long-term care only. That's their main thing, but they also do other things like annuity and occasional life case. So what happens is a lot of times when they're applying for long-term care, they get declined. Well, the products that we offer today, we have some that'll underwrite morbidity and mortality, but most of them underwrite only for the mortality side. So if your client can qualify for life insurance, they just open up a big opportunity for them to have long-term care. So if you're out there this morning, you sell long-term care, you know exactly what I'm talking about. It's frustrating because now your clients, they're concerned. What am I going to do? We're going to have to tap into our retirement dollars if one of us goes into a facility. So this is how you can do that. Plus, if they don't use it, they're not going to lose it. It just goes tax-free to the beneficiaries. And the other thing, too, as I mentioned, $3,400 a year is what the average cost is for clients 70 to 74. So do they really want to pay that high premium and potentially lose it? Most of the time not. They don't. Okay, so let's look at some general information as far as what we have. So more times than not, after I do this, I get phone calls, or the life department gets phone calls because something happens. It clicks in your head. Oh, I know a client. So what we have is this. Most of the carriers out there that we have will issue from ages 50 to 85. Now, we do have a carrier out there that'll issue up to age 90, okay? Maximum premium varies by carrier. So what some of them will do is they'll look at the base, what the net amount of risk is, so the death benefit minus the premium, which I kind of alluded to already with some of those different old single premium or old traditional life policies. We also have some that'll have a maximum death benefit of $750,000, so whatever premium it would take to get to that level. We also have some carriers that'll take over $1 million in single premium. So if you know a client that's sitting with a ton of cash right now or a ton of money, I'm working on a case right now where this client or this advisor's clients have $15 million, and we're looking at putting some of it into single premium life, some of it into annuities. So there's a lot of room out there. Here's the other thing. You might think, well, I got a client that's got a little bit of cash out there, a small CD. What can I do with it? Well, we have some carriers that'll allow you to put in whatever it takes to buy $5,000 in death benefits. So I might only take $2,500. So let's double that money that they have. I was an investment banker for a short while, and I'm telling you what, that was pretty tough at times. You've got one of those clients that comes in, they have $2,500 in a CD, and that's what they're going to use to cover their funeral when they pass away. And they don't want to be cremated, but that's what it's coming down to for them. So what I was able to do, and what you can do too, is put that into a policy that's going to get them a $5,000 death benefit. We're going to double their money for them. We also have carriers at $5,000 minimum. We have them at $10,000 minimum, some at $20,000. So depending on the carrier, that's why we're going to ask you questions. That's why we have so many carriers, so that we don't miss an opportunity to help you. Our underwriting is pretty general, where it's a Table 4 standard issue. Most carriers will do that. We have a couple that'll go up to Table 5 standard. We also have some that'll go up to Table 8, and that's non-medically underwritten. There's no exam required. We do a paper app, we do a phone interview, and you're done. They generally, as I mentioned, will underwrite mortality, not morbidity, but we do have a carrier out there that we all know they'll use mortality and morbidity. So that client, if they don't qualify, I'm going to tell you who they are. Lincoln Financial's MoneyGuard, excellent product, been around for a long time. A lot of you have probably sold them, but you know that they're going to underwrite. If they don't qualify for long-term care, they decline them. Well, you know what? We have been able to place a tremendous amount of those with some of our other carriers. So if you've got some declines out there from Lincoln Financial, again, love them, great carrier. Give us a call because we've been able to place those with some of our other carriers. And so let's look at benefits again. We've got some products out there. They have a return of premium. Again, most of them all have a long-term care and home health care. Some will provide a monthly. Some will do it in a lump sum. So just depends on what's best for that particular client. Some will have free withdrawals up to 10%. Some will be less than that. You can transfer qualified, non-qualified benefits. But here's one thing that I really like. In addition to all the long-term care interest that's out there today, your clients want control. And they know when they bought that first life insurance policy 40, 50, however many years ago, it was, I buy it, I can't have it, I can't touch it. It's for my beneficiaries. The nice thing now is they know if I put this money into a single premium life policy, if I get a bad taste in my mouth in 3 years or 4 years or 2 years, I can have all my money back and I can have some growth on it. Or maybe I decide I want to take the grandkids at Disney World, for example. I know I can take a free withdrawal out, or I can take a loan out of my policy. I'm in control of this contract, not an insurance company. So that really helps a lot. Okay, looks like I got a couple questions in here, folks. I'm just going to answer these real quick here. Yeah, I'll email the presentation to everyone. Do I have any flyers that I can show to my clients? You bet we do. We've got some really good flyers out there. In fact, one that I really like that's out there is we've got it shows the single premium life compared to a CD, compared to an annuity. And it's very impressive because they actually give a pretty fair value on the annuity and a probably more than fair value on the CD. So it's a good comparison piece that we can make available to you. So absolutely. What are the companies licensed in New York and New Jersey? You know, we've got a lot of product actually approved in New Jersey. New York's a little bit more difficult. We do sell the Lincoln Financial product there. And we also have another one that we'll use that is a fully underwritten plan, but we can certainly provide a nice product there as well. So policy with cash benefits and no reimbursement required. Right. Yes. Okay. So do we have an, you know what? We do have a PowerPoint presentation that can be used in a seminar. So when we're done, if you want to give me a call, I can, and I'll tell you one thing, I'm going to call everybody who's on here this morning. So I would certainly appreciate it. My name is Mark Raymakers with Insurance Agency Marketing Services. So when I call, if you would just, maybe take 3 minutes, I value your time. You know, time is important, especially when we're trying to wrap things up for the year here. I've been out there in the field. I know what it's like. I don't want to waste a lot of time with a sales or marketing person myself. You know, I certainly respect their time. But you know what? We're just going to go through it real quick, see if there's an opportunity for us to help you. And like I said, more than likely, you probably have some clients in your block of business that would really appreciate knowing about this, because you know what? If you don't tell them about it, how are they going to find out? They're worried about long-term care. I promise you that. Okay, so got a mutual company, single premium life where the cash and face possible cash long-term care benefits grow? Yes, we do. That's a great question, William, or Barry, I'm sorry. Yes, we do. Those do grow. We have some that are an endowment plan. We also have those that have growth potential. So again, yeah, I will, as far as sending that flyer out, just give me a call. We'll email it over to you. Or if when I call you, we'll certainly discuss what might be best for you. And I don't want to get hung up on questions too long here, as I know some of you need to bail out for prior appointments today. But when transferring qualified funds to this type of investment, is it considered non-taxable? No, unfortunately, it's not. You got to pay the piper, Karen. That's the way it works. And the thing is, though, is that we've got some different software things, and I've got a new thing that I'm working on right now where it's going to show what happens if you leave that money sitting in a qualified account versus paying the taxes now and setting it up for the beneficiary. But what happens is, I'm going to hit on this real quick, folks, because I think you can all benefit from this. But if you have clients out there with qualified assets and they don't want to or don't need them, but want to be able to potentially pass them off one day, a couple things to think about. One, if your client leaves that money sitting in that qualified account and they die and they pass it on to the beneficiary, which is probably going to be their children are going to be in their peak earning years if you think about that. So now they inherit $100,000. They add that onto their income. That could put them in a higher tax bracket and they're going to pay a lot of tax. Or what we do is we do a one-time transfer from that qualified annuity into a single premium immediate annuity. Now these products are a joint product. You can't break them apart. Once you buy one, you're buying both. So you're buying a single premium immediate annuity and a life contract. That single premium immediate annuity, we can do 3, 5, 7, or 10 pay, depending on the company. What will happen is every time there's a SPIA payout that's going to go directly into the life insurance contract, your client gets a 1099 for that SPIA, that taxable SPIA portion. That continues every year until the SPIA is exhausted. If the client dies during that process, they get not only the SPIA, which would be taxable, they would also get the death benefit, which is tax-free. So we do quite a bit of that. So keep that in mind. All right, let's go ahead. Let's move on. I'm going to give you some ideas here. You've probably already read through this, so I'll go through this fairly quickly. These are examples of some cases that we've actually had come in. We had an 83-year-old female. She's a type 2 diabetic on blood thinner medication and 2 different blood pressure meds and a cholesterol med. We got her issued standard. We had a male 78 who had kidney disease, type 2 diabetic on insulin and has gout. Standard. Female 68 with colon cancer in 2004. She had edema, high blood pressure, and bone density loss. We got her issued standard. Okay, so here's some other examples of abnormal risk. I mentioned to you that we have a carrier out there. We'll go up to table 8. So this is really neat. We had a client that was, or not our client, we had an agent who had a client, had a heart attack. At 2 years with full recovery, they got issued on the level 2, so they got a table 8 rating. Bypass or angioplasty after 2 years, got issued. Cancer in remission after 2 years. That's a big one. We see a lot of cancer cases that come in. A lot of our carriers won't take it, but we do have one here that will. Parkinson's after 2 years, no treatment. Stroke after 2 years, no treatment. A pacemaker after 5 years, no treatment. So stop and think about maybe some of the clients that you're working with here. Don't walk away from a sale because you don't think they're going to qualify in underwriting. Give us a call. Let us give it an opportunity to run it through underwriting. And if we can help you with that, we'll certainly let you know. But yeah, give us a call on that. And again, think of the morbidity versus the mortality underwriting. If they qualify for life insurance, they're going to qualify for the long-term care benefits. So single premium life compared to annuity. We're talking about here, if you look at the long-term care payout. When you have a long-term care payout coming out of life insurance, it's going to be tax-free. When you look at those with the annuity, more times than not, I'm going to repeat myself there, but more times than not, you're going to be paying some tax on the benefit because you have the growth that's also paid out, which is going to be taxable. If you look at the account values in the contract, depending on what we're looking at, you're going to see that the account values on some of these single premium life, especially these index ones that are sitting on a whole life chassis, you're going to see that that account value is very close to some of those annuities out there. In fact, a lot of the annuities out there. So if your client is concerned about growth on their money, you're going to be able to give them that growth. So if they decide to maybe exercise a return of premium feature, or maybe they want to take out a loan, or maybe they want to take out a withdrawal, which some of those products, as I mentioned, do have the ability to do that. So they would then know, hey, you know what? My account of value is looking pretty good. And I know that if I go into a facility, I'm going to get that tax-free death benefit. If I don't use it, it's going tax-free. And that hence the next point, death benefits tax-free. You don't get that tax-free death benefit on an annuity out there. And again, that is, we're going to look at a comparison here that's based on, let me go here real quick. A comparison is based on $100,000 for a 65-year-old male. So what I did here is I'm taking a single premium life insurance contract. This is the long-term care payout compared to an annuity that has a long-term care payout out there. So at 5 years, your client goes into a facility. Now they could have this policy in force for a year, but after 90 days, the doctor says they need to go in a facility. Your client's going to get $4,500, almost $4,600 a month. Okay, compare that to annuity at $1,100. Year 10 is $4,500. Compared to annuity, 1721. Year 15 compared to annuity, 2,400. Year 20, the annuity product is finally catching up as far as a payout. So, I mean, think about that. The other thing to think about here too is, as I mentioned, the benefits are tax-free. With the annuity, they're taxable. So I always like to put this to the client like this. If I were to come to you and you're concerned about long-term care, and they say, well, I got an annuity I can use for that. Okay, well, let me ask you this. You got $100,000 in annuity. If you went into a facility and I came up to you and I had two buckets of money for you, one had $100,000 in it, the other had $175,000 in it, which bucket would you like to choose? Well, of course they want the $175,000 bucket. Okay, well, you can have that, but here's how you got to get it. We got to qualify you for it. We're going to look at a contract out there that's a single premium life insurance plan that's going to provide you $75,000, or of course, depending on the age of your client, $75,000 in this case, more than what your annuity is going to pay you. Okay, so that's a nice thing. And in addition to that, let's say you don't use it and you pass away. Now that $100,000 policy that you have over here, this $100,000 annuity, okay, so you've got let's say $50,000 cost basis on it. You now have a $50,000 taxable gain you're going to pay taxes on, right? The life insurance contract over here, your beneficiary is going to get $175,000. So which bucket do you want? You want to keep that annuity, or do you want to look at something else? So here's an opportunity again for you to look long and hard about the single premium life. All right, let's look at the account values, okay? So we look at the single premium life account value at year 5 are $121,247. Annuities $124. Year 10, you can see the numbers. Year 15, you see the numbers. Year 20, you see the numbers. Okay. So I mentioned the cash value in the single premium life is pretty competitive. Growth is tax deferred on the single premium life. They're both tax deferred, so they grow and grow and grow, right? So very competitive there. Let's take a look at the death benefit. This is a big thing, as I mentioned earlier. Which bucket do you want? So, and if you look at the annuity, this is after tax value. So we're taking into consideration the growth, and then we're going to also look at what the net after tax is. So when your client passes away year 5, they got $199,000 versus $118. Year 10, look at that, $60,000 different. Year 15, $60,000. Year 20, $213,000 versus $160,000 tax-free. So you package this all together. The death benefit's tax-free with the annuity that's taxable above the cost basis. So what really makes sense? I like the life insurance. So who are the players we've got? This is a good share of them. We have Assurity Life, Baltimore Life, Equitrust, Foresters, Lincoln National, National Guardian, National Western, One America, Oxford, Sagicor. We have Security Mutual, Lafayette Life, Mutual Trust Life. We have one other carrier. I'm not going to tell you who they are, but we're finishing up the contracting on that. I will tell you it's a fraternal, has some tremendous benefits for your clients when they buy it. So we have some great carriers out there. So let's look at a couple, some different things to consider as far as opening and closing statements. I heard a good one. I should have brought these notes in, but I had a conversation with our top selling single premium life guys, and they said, you know what? Nothing blows a retirement program like a long-term care stay. So stop and think about that. They may have everything slated out perfectly in their retirement, but if they go into a facility, you stop and think. If they're spending $80, $90, $100,000, I've seen it. I had a client whose mother was in a facility and it was costing her over $100,000 a year here in Nebraska to take care of her, and 24/7 care. So you stop and think about it. If your client lives in a facility for 2 to 3 years, it could be $300,000 that's coming out of their retirement program. So pretty big thing to think about. So when you visit with your client, if I can show you a plan for your existing annuity or CD that you're currently not drawing on, you're probably not going to, that's going to provide you a 12% bonus on your money. So we'd reposition these dollars, get you a 12% bonus. So now we're going to put you way ahead of what your CD is, and that annuity that's at its surrender period, we're going to bonus that again. It's going to have a full return of premium. So if you ever wanted to bail out of that product, you decide that, you know what, hey, this isn't for me anymore. Something changes in my life and I'm going to need some additional income. You can 1035 exchange a life to an annuity, right? But you can't go annuity to life. So we could reposition that money into something for some growth, for some income if you need to. The other thing is it's liquid. So if you wanted to take a 5 or a 10% free withdrawal from that, you certainly could. It's your money. You've got control of it. We have index link returns. So on the 1 year point to point, for example, we're getting about a 5% return, a little less than some carriers, a little more than others. Tax deferred growth. So that money you put in there, it's going to continue to grow tax free. And how about this? You're concerned about long-term care and home health care benefits. This product that I'm talking about here will provide you a tax-free long-term care benefits or home health care. Maybe you need someone to take care of you. And how about all this? If in addition to all these things here, if you never use them and you pass away, it's going to go tax-free to your beneficiaries. Would that be of interest to you? So you can use one or all those points. I've had agents use, they pick a handful depending on the situation, and the client says, well, yeah, what is that? Well, and you tell them what it is. If you come in and say, you know what, Mabel, I got a great single premium life product I want to talk to you about, they're shutting down on you. So keep that in mind. Ask the questions, paint the picture for them, and then tell them what it is, obviously. Why you should be selling single premium life? Well, help your clients, because as I mentioned before, they don't know about it until you tell them. And they are concerned. Believe me, they all are concerned about what's going to happen to their dollars. They've had friends, they've had family go into a facility. They've had friends and families that have needed some home health care benefits, and they've drawn their retirement assets down to make that happen. So they're concerned about it. And so this will help. The other thing, too, is reduce future taxes for beneficiaries. Again, if we're looking at an annuity product that's got a minimal cost basis and some tremendous growth, someone's going to have to pay the piper. We all know that. So this is a great way for them to help offset the future taxes to beneficiaries by putting it into a plan now. It helps you through slumps. Hey, let's face it. There are times when things get slow, and we all know when those are. So here's an opportunity for you to go through your files. If you don't have a CRM, or maybe you've got a great administrative assistant that knows some of your clients well enough to know who to talk to, or could go through your files. Look through those clients out there right now that you know aren't touching their annuities, that are stacking up RMDs, that have a large annuity they aren't taking advantage of using their 10% free withdrawal. In addition to that, if you're an annuity producer, it's going to help you find additional annuity dollars. Because you know what, if you look at it statistically, only 51% of the agents in this business do a review. So you know that and you probably actually have a client out there now that you may not have written all their business. Somebody else has. This is an opportunity to go back and look at some of the stuff that another agent had written. A chance for you to look at what they've got. Or even when you're prospecting, chances are that person that you meet on Monday or Tuesday or whatever day it is, there's a 49% chance that the person that was there before you has never come back. And that's why I say, ask them even about those life policies. What do you have today? What have you invested in the past? Are you happy with your returns? Let's take a look and see what you have. There are some tremendous products out there today that can help put you in a better position. Life changes. So does your retirement program, so do products. So let's look at what you've got. Let's see what we can do to help. Remember, you can get up to 15% commission. So, I talk with agents every day that they want to know how much money they can make. They want to make the most money that they can. We also have agents that, hey, I don't care about the commission. Just get me a great product. Well, we can do both. We can provide you some of the top commissions out there, and we can provide you some products that you can sell that are going to make you sleep well at night. And know that you're helping your clients, because I'm going to say it again, they don't know these products exist if you haven't told them about it. And the thing is this is funny, we have a lot of agents in our database, but we've had agents that have come in and they present an annuity, and some agent comes along and backdoors them with a single premium life, and they've lost the sale. So it's worth it to know 2017, you got a brand new clean slate. If you're not talking about this, I'd love to help you do it. It gives me great pleasure to see agents be successful in this business, because it's tough. And we all know there are more agents leaving the business than are coming in. So let's take care of what we've got out there, and let's see how we can help you in 2017. We've got some great things we're working on, and some things that we've already put in place for other advisors that have been very successful. So why should you work with us on it? Well, we've been in the business for 30 years, and we're one of the top IMOs out there for single premium life. And we know that because of what the carriers tell us. We know that because of some of the searches that we've done, some of the things that we've done as far as logistics are concerned from social media. So not to pat myself or pat ourselves on the back or toot our own horn, but you know what? We take this part of the business very serious, because when we first started 30 years ago, we did a lot of annuity business. And we've seen a lot of the agents that have written business on annuities that clients die with those annuities. And so it only made sense for us to take a closer look and say, what can we do to better help these agents, better help the clients? And Single Premium Life just was screaming at us. So we said, hey, let's really dive into this. Let's learn this business. Let's know it. Let's be good at helping our advisors. And we really have. And so that's why I say we really want to help you. We've done some good things for advisors out there, and I know we can do the same for you. We do have the new producer bonus. So for those of you who get started, it's really a nice way to start the year. You get contracted. We help you with a few cases to get started. You get the bonus going, and then we help you on every other case after that. We do the marketing reimbursement as well. So you stop and think about it. If you were able to cut your expenses in half, that increases your revenue. That puts more money back in your pocket, which allows you more opportunity to grow your business, which helps pad your retirement. I mean, the list goes on and on. So that marketing reimbursement is a big deal. We also have a Single Premium Life toolkit. So there's a number of things, as I mentioned. There's different brochures, different flyers, etc. You'd need to be contracted with us in order to get that. We don't just give that away. Unfortunately, we do have agents that come on and take advantage of some of the things that we've got set up that send the business somewhere else. Again, it's a competitive market out there. We need to earn your business, and we really appreciate an opportunity to do that. Single Premium Life consumer presentation, we have that as well. So if you're wanting to sit down, you're one of those guys or gals that likes to use something in the presentation process. I used to. It's easy. It's something to follow along. It's available to you there. Just let us know. Again, you can contract with us. We'll make all these tools available to you. Marketing pieces can be customized as well. So if you want to take advantage of that, we've got some pieces available that you can email or mail or however you want to use it. So we've got some pieces that have been pretty effective and successful for you. Okay, now with that said, that concludes what I have. So if you have any additional questions, please feel free to go ahead and type those in the question box, and we'll address those accordingly. And or of course, if you're needing to run, remember one thing, that we're going to email this webinar over to you. And if you have time later on to give us a call, just call the number on the screen. It's 800-255-5055. I know some of you are probably driving. We get a lot of that. We get some call-ins. You can't see the presentation, but you can hear it. So again, that number is 800-255-5055. You can ask for anybody in life marketing. We're all very versed in these products and can help you. But, and one more thing I want to just tell you is that, as I noticed a lot of you had joined in right after we had initially kicked this off, but we have a Single Premium Life webinar every Friday at 10 a.m. And if you can't attend it because you've got an appointment, and I love to have you on here because it gives you an opportunity to ask questions. But if there's a situation where you can't actually sit in, you can always register, and then we'll send you the recording. Okay, so let's see here. Please, well, as I said, everybody in here is going to get this webinar emailed to you. So, yeah. So, yeah, Stephanie, you'll get a copy of this. Yeah, I send it out to everybody. Even if you got on late, if you've actually registered for the webinar, you're going to get a copy of it. So I know who you are, and I will be calling you. And, I mentioned I know your time is valuable, but would really like an opportunity to visit with you because I am so confident that we can help you. It may not be a huge part of your business, but it might be a part. And so when you're helping your clients, we're in this business obviously because we like to help people, but also because we can make a living at it. It's a difficult business, and I think it's a simple way for you to grow your business and obviously to help the clients and make good money in the process. So real quickly here, I want to tell you, I probably should have said this earlier, our office hours for next week. We're going to be here every day. So we're going to be open Monday through Friday, and we're going to close at 1 on Friday. So if you have business that we need to help you out with, certainly would encourage you to call before 1 o'clock Central Time on Friday. Okay. Question came up. How do single premium life returns compare to IUL returns? Well, Sharon, that's a great question. When you look at your traditional fully underwritten index universal life policy, They're going to vary, obviously, as far as returns are concerned, depending on what index option that you choose. I will tell you that when you compare those single premium to the traditional fully underwritten IULs, you're not going to get as good a return, but you're going to get a return that's competitive. One of our leading carriers right now, we're getting about 5.2% is the current average return. When we look at the 1 year point to point, we do a blend. We also use maybe the 1 year monthly cap. So we get about a 5.2%. The cap rate on the 1 year point to point on that top carrier is 9%. So there's opportunities out there. If you compare that to the fully underwritten type products, they're getting around 7 point, whatever, depending on the carrier. Again, and because AG 49, we have to remain somewhat competitive. You can't have this overinflated rate, but you're not seeing them as high as you used to because of it, but they're around 7%. And then the cap rates are 11 plus, so on the 1 year point to point. So hopefully that answers your question. It's not quite as good. You're going to see it be probably more like an annuity type of return, but just a little bit better. And keep in mind that's gross, because we have the expenses coming out for mortality charges. So the net's going to be even a little bit lower than that. But if you look at the comparison, if you saw the slide as far as the returns are concerned in each 5 year increment, we still do pretty well. But again, if you've got a client that if their main objective is growth, then a single premium life may not necessarily be the best thing. But I will tell you, though, that if you look at that and you couple it with the benefits for, accelerated benefits for long-term care, home care, or the tax-free transfer, it's still very competitive. You're going to get some growth. But if their main objective is growth, and some other investment vehicle probably is going to be better for them. We don't want someone to put money into a single premium life policy with the intention of setting up an income stream, because they're not effective that way. And part of the reason for that too is because they're Table 4 standard issue. So you have mortality costs coming out of that. And a lot of times I'll get calls and questions like, well, what's the internal rate of return? Well, you know what, the fees are too high, or whatever it be. Okay, so some good points, some good questions. But the thing to think about too is compare that single premium life to your favorite internal rate of return product, or whatever fee product you have. We have to look at a lot of different things, right? We have to look at what is the tax consequence upon death or upon acceleration for the confined benefits. And if your favorite internal rate of return product or your favorite product has lower fees, if that outperforms a single premium life, well, then it's a no-brainer where to go. But I will tell you right now, if you compare that single premium life to what I just mentioned, you're going to be pleasantly surprised and pleasantly impressed with what your client's going to walk away from. If it looks good, it smells good, and it tastes good, it's probably pretty good. And that's why we see the single premium life sales continue to grow and grow and grow every year. It is a hot product. It makes sense. Sometimes you don't want to get choked up in the weeds because you miss out on an opportunity. And in the end, you potentially could be hurting your client, and that's not really what it's about. If these products weren't good for your clients, I don't think that we would see as many companies that are coming into the market as there are today, because it makes sense. It's a good fit. And now, again, one shoe doesn't fit all. We know that. So that's why we're going to ask questions. We want to make sure that we're providing you with a product that really satisfies your client needs. And quite honestly, there are some times that it just doesn't make sense to do a single premium life. And I'll tell you, I've told many agents, you know what, I wouldn't use a single premium life. I'd either do a fully underwritten plan, or I'd stick that money in an annuity or some other investment product that provides some safe money. Okay. You know what? I don't see any more questions in the question box. I have a tendency to talk a lot. I'm very passionate about the business and this product. It's a good thing. And again, I've said this probably 4 or 5 times. Your clients don't know about this because they haven't heard about it. And let us help you introduce it. It's a fun product. You're going to love it. First one's always the hardest, but I'll tell you right now, I got to say real quick, for those of you that have got one more second here, is the agents that are selling this product, I'm kind of grinning here because I've heard this many times, like, I don't want to sell this product. I'm an annuity guy. And they say, gosh, you just you just kept hammering me with this. I went out, I presented it, and I sold it. And it's like, it was so hard for me to do. And now it's like, why did I not listen to you earlier? Why did we not offer this product earlier? We love it. And so you might find yourself saying that here after a couple of presentations and a couple of apps that you get written up. So give it a shot and give us an opportunity to help you with it. Again, Mark Raymakers Insurance Agency Marketing Services, thank you so much for joining us. I want to wish you a Merry Christmas, and I hope to talk with you here within the next probably 48 hours. If I don't get a hold of you today, I'll be calling you early next week. So thanks again for joining us. We look forward to visiting with you soon. Thanks.